Hey everyone, welcome back to Corporate Dakota. Today SVCO just filed an 8K announcing an increase to their at-the-market stock offering, and I am seeing a key change in how they're funding growth. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is significantly boosting its ability to sell stock, which signals a potential shift in its operational strategy. So what is actually happening here is that Silvaco Group Incorporated, the company behind the ticker SVCO, has updated its plan to sell its own stock directly to the public. Think of it like a company saying they have more shares to offer investors who want to buy them. This is an at-the-market offering, which means they can sell shares whenever they want, at whatever the current market price is. It is a way to raise money without needing a big formal stock issuance. They initially had an agreement in place back in March of 2026 to sell up to $15 million worth of stock, but now they've decided to up that amount. They filed an updated document on May 8, 2026 that allows them to sell an additional $20 million in stock. This brings the total potential offering to a whopping $35 million. They've already sold some shares under this program, about $4.3 million worth as of May 7th. That means they still have a lot of room to sell, up to about $30.7 million more. Now, there is a bit of a technical detail here about how smaller companies used to be limited on how much they could raise this way. It was called the baby shelf rule. But Silvaco stock has been doing well. Their public float, which is basically the value of their stock available for trading by the public, has grown significantly. As of May 6th, it was over $175 million. Because of this growth, they are no longer restricted by that baby shelf rule and can raise more money without those previous limitations. This is a really important development because it means they can be more flexible in pursuing their growth strategies. They've also had their lawyers, White & Case LLP, review the legality of selling these additional shares, and that opinion is filed with the report. It is standard practice to make sure everything is above board. The filing also lists some supporting documents. Exhibit 5.1 is the legal opinion we just discussed. Exhibit 23.1 is the consent from White & Case LLP, basically saying they agree with their own opinion. And Exhibit 104 is an interactive data file that helps search engines understand the content. The report is signed by Christopher Zegarelli, who is the Chief Financial Officer, dated May 8, 2026. This signifies the company's official acknowledgement of this increased stock offering. So what does this all mean for Silvaco Group? They are clearly looking to fund further expansion or operations through selling more stock. With their market cap around $376 million and over 400 employees, this move suggests they have ambitious plans. The fact that analysts are predicting their stock price to rise and that they recently reported Q1 earnings, even with a loss but beating revenue estimates, paints a picture of a company that sees opportunities ahead and is preparing to seize them financially. The shift away from the baby shelf limitations is a good sign for their growth. It shows the company is maturing and its stock value is increasing, making it easier to raise capital. This flexibility allows them to potentially invest more in research, development, or even acquisitions without being constrained by older, smaller fundraising limits. My biggest concern is always with dilutive offerings, which this technically is. When a company sells more stock, the ownership percentage of existing shareholders decreases. But in this case, because the company's valuation has grown and it is no longer under the strict baby shelf limits, it seems like a strategic move to fuel growth. I will be watching closely to see how these funds are deployed and if this increased capital leads to tangible improvements in their financial performance and market position, especially considering they just reported a loss in Q1. Although they did beat revenue expectations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.